welcome back to another episode of the Globe Talks with Traders series, where you can learn the ins and outs of crypto trading. This week, I'm delighted to welcome onto the show Justin Denathan, Institutional Sales Director at Amber Group. Watch on to find out the best strategies for long-term gain and how to deal in a bear market. Now, on to the interview. Hey, Justin, how are you?
Yeah, I'm doing fine. Really good day here. And also thank you for having me on. I've been listening and watching your videos for quite a while, actually.
Oh, thank you. Well, it's a pleasure to have you on. So let's jump right into things. Can you tell us about your background and how you got into crypto trading?
Yeah, sure. Look, for me, it really came organically. And I think it's happening for quite a lot of people nowadays. But for me, it was a while back. But so I was trading stocks, bonds, FX, precious metals, like very traditional assets. And I was looking to diversify. And so a friend told me about Bitcoin. That was back in 2015. I invested a tiny amount just to kind of try it out. And fortunately, it just rose massively, like in a way that I had never seen in traditional assets. So of course, that caught my attention. I started reading books about blockchain, cryptocurrencies, looking at charts, of course, looking at projects. And also something that I'm really interested in and that caught my attention was all the analytics you can find, relating to blockchain transactions, the size, the direction, and so on. And so before I knew, I was hooked. And then professionally, that kind of grew naturally as well. So I was a derivatives broker back in 2018. And my firm was essentially looking to open a crypto derivatives desk in case some of the institutional clients wanted to trade them. And so they asked me to help get a license, onboard clients, get connected to the CME and ICE, which are like exchanges on which you can buy and sell futures and options on Bitcoin and Ethereum. So we did all that. And of course, that got me involved in a much deeper way in the space, connected to large and sophisticated players and so on. So since then, it's been what I do for work. But then even before that, I was already trading and already invested in the asset.
Amazing. So you mentioned trading crypto since 2015. So are there any, market trends that you've learned from your years of trading experience?
Yeah, sure, definitely. So yeah, again, since 2015, there's been like the 2016, 2017 ramp up that we all know, and then the 2018 bear market that people talk about, and then the 2020 market crash that we had, due to COVID across all assets, which was super painful, but also short-lived. And then the ramp up we've had now, and now the bear market in 2022 that we're in. I think in trends with regards to projects, I think it's something really interesting to look at because during each cycles you will have different narratives. And the thing that's also really interesting with regards to crypto is that the narratives switch much faster than they would in traditional assets. So my suspicion, I've never really brokered or traded bonds on a professional level, but there's not much happening on a month-to-month basis. There might be like a lot of market movements, but there's no new trends or new narratives. When you enter into the crypto space, you definitely have to keep an eye out for everything that's happening, whether it relates to, or in the earlier days, you really just had Bitcoin that was the main dominant thing. And then, of course, you had all the flurry of altcoins that came up. And that was what we saw in 2016 and 17 with the ICO boom, right? Things pulled back a bit. Then you had the whole DeFi thing happening. You had the whole NFT happening more recently, the whole metaverse. So those are all trends that you need to keep track of. But you also, I think, need to understand that those don't last forever. And now I'm not saying that as in they're dead and they were a bubble and now they've burst and they will never come again, but more that if you're trading them, so if you're seeing them as investment vehicle and you're trying to keep a pulse on the market, you also need to understand that they won't generate the same returns as they do at the beginning, right? For example, we are seeing that right now with the NFT space, where I actually do think that the NFTs have a lot of value proposition, maybe not necessarily the profile pictures in and of themselves, but the concept of NFTs. If you can plug into that and invest in the right assets or in the right projects, there's definitely money to be made, but you also need to have that discipline to cycle back into more fundamentally driven or longer standing assets, right? And so for me, that's always Bitcoin. So I would say that's maybe not really the point of your question, but in terms of things to learn, there's definitely a lesson here, which is you need to cycle back into the quality assets that you can hold super long term, regardless of the volatility you'll find in those assets, right?
Are there any kind of trading strategies in holding long term then?
Well, the thing is, if you're hodling, which I do, I also want to optimize and diversify slightly into other coins. But the mindset here is to go into those assets in order to accumulate or increase your main bag, if you will, right? Which is, for me, my portfolio is pretty much always 55 to 60% Bitcoin, and then 25% Ethereum, and then the rest is diversified across all coins. But those altcoins, not all of them, they're meant to be hodled, basically. And I think that's the mistake that a lot of people do, is they'll read a nice white paper, they'll tune into a Twitter channel, and they will think, wow, there's real value there, so I need to buy it and I need to hodl it because it might be the next Bitcoin. But I think that when you've got 3,000 different coins, you've got to play the odds, right? The chances that you've uncovered the next Bitcoin are relatively slim, and the chances that those projects are going to suffer from a lot of things that happen in markets or competition or hurdles is pretty high, right? So I do hodl, but I definitely want to be able to cycle back from those more exotic coins into the lower risk coins, which for me are always Bitcoin and Ethereum. The second thing I would say with regards to hodling is you need to be able to reimburse your initial investment in US dollar if you're not hyper confident about the asset or your ability to hodl on, or your income, right? So if you're dependent on that money to live, it's not a good strategy, right? So if you do make profits hodling long term, at some point when you've got multiple X's of profit, you need to be able to sell a little chunk and go back into US dollar, basically. And what that's going to do is make it a lot easier to actually hodl during the bear market, right? So just to kind of reiterate the point and make it clear, if you were hodling in 2016, 2017, or if you were hodling in 2020, 2021, it would have been smart at some point during that rally. Of course, you couldn't time the top, to sell a little bit to just reimburse the initial US dollar capital that you put into the crypto space. Because then when things drop 50, 60, 70%, depending on the asset that you're holding, well, you're kind of in it for free, right? So it's still painful when you're looking at the portfolio value going down, but you can actually bear that pain, if you will, and stay strong in moments of volatility.
Mm-hmm. Yeah, and then it's almost like you've lost nothing, right? When you've yeah.
Exactly. Now, let's be very honest with ourselves. When you have multiple X's of profits and then you see it go down in USD notional, you still feel like you've lost something, even if you're in it for free, right? But what I'm saying is, if you've put all your savings or all of your investment capital into an asset, it does really well, and then it drops 50 or 60%, you will feel very stupid. Your friends will ask you about it and you won't have a good answer, to say about it. Maybe you'll need cash and you'll be forced to sell at the worst possible moment, right? Because intuitively, we all know that we shouldn't be selling when Bitcoin is at 20K, but rather we should be selling at least a bit when Bitcoin is at 50K or 60K, right? And so I feel like being in it, quote unquote, for free makes it easier to make smart decisions and not get emotional. I'll still use charts. Look, I look at chart on a daily basis, if only to serve my clients and have meaningful conversations when I talk to counterparties. But also I do use day-to-day charts when I'm trading crypto to crypto, which is what I was mentioning earlier, which is if you are buying into more exotic coins like altcoins, lower market cap coins, you'll want to actually be trading them back into Bitcoin if your objective is to accumulate, right?
Right.
And so I can talk about the strategy, a bit later down in the interview. But in terms of time frame for the charts, I do look at daily charts when I'm trading crypto to crypto, and then when I'm trying to analyze cycles and longer term market movements, I actually do something that not everybody does, which is look at charts on a weekly basis and also on a monthly basis. And I think those charts are really interesting because the longer the chart, typically the more reliable the trend is, the candlestick pattern, even the indicator is, right? So if you look at a monthly chart, it takes the whole day-to-day minutia out of the equation. You don't get too emotional about the ups and downs, and you're more looking at the broader picture and the really long-term perspective, right? And then when you do see something that looks unusual, for example, if you see a long downtrend and then you see a bullish engulfing pattern, right? Like a very big green candle at the end of that trend, you think maybe there's something happening. If that's happening on a monthly basis as opposed to a daily basis, maybe there's something to be paid attention to, right? So I think those charts are useful. And then the indicators, you look at those, they tend to be a bit more meaningful. Like if you see an RSI or stochastic divergence on a weekly or on a monthly, I think I still wouldn't trade it because I don't believe indicators should be used as a pure trading mechanism, but it can kind of corroborate your hypothesis that you're at a bottom or that you're at a top and that you should take some money off the table or that you should be allocating a bit more.
Amazing. Thank you. So how you were talking about bear markets earlier. How can crypto traders succeed in a bear market?
Sure. So the one thing that I was mentioning, of course, is cycling back as soon as possible into more top market cap coin, right? Because they undeniably hold up better than the newer ones. That's not even a judgment of value in terms of how well those smaller cap coins can do, but just that in a bear market, people are essentially de-risking, right? So they look at their portfolio, they look at the more risky, the more volatile asset, and they go back or they cycle back to the safer ones, right? And that happens amongst assets. So if you have crypto, maybe you sell some of your crypto to go back to traditional assets. I don't do that, but investors would. And within the crypto asset, you still have different degrees of risk, right? Maybe a way to succeed, of course, is if you've got the temperament for it, look at derivatives. Now, as I mentioned, I used to be a derivatives broker. I've seen a lot of very smart and professional traders absolutely get burned, by it. But when you do see chaos taking place, again, if you have the temperament for it, shorting the market can be a good idea, right? And we've seen that this year during May and June, where there was the whole debacle with Luna, UST, Celsius, Three Arrows, BlockFi, Babel, and so on. Irrespective of what you think of those events, you know that something bad is going on and that probably markets are due lower. And they did go lower, and I think lower than most people expected. So there was an opportunity there. The other thing that I would mention that does require an infrastructure, like the one that we offer on Whalefin. Of course, I'm preaching for my own church or my own choir, but we do have something called dual currency products. So if you feel comfortable trading options, which you can also on a lot of different platforms, you'll have the opportunity to optimize your entry or earn a yield for taking a directional view. So you can kind of sell the volatility once it's gone high enough, and you've seen some wild move taking place. And so with a dual currency product or the options, if you understand how to sell covered calls and puts, it can allow you to buy lower or sell higher or earn a yield while you're waiting for that to happen. But again, you need to research those strategies and really understand the products that you're using. But that's one way to take advantage, essentially, of volatility.
Well, awesome. So, as always, do your own research, and this is not financial advice.
Not financial advice. I should have mentioned it. I didn't even think about that. But those are ways that
Yeah.
I could see investors using it. But again, as you mentioned, for me, I'm a hodler, so I'm not even really doing most of those. And it's more about following those long trends and maybe cycling a bit out of quality assets or exotic ones when I think we've reached exuberance, let's say.
So you personally are a hodler, but you're an institutional sales director at Amber Group. So can you actually tell us what it is like trading for clients instead of for personal use?
Sure, definitely. I just want to clarify though, as a sales director, I'm not in charge of trading at the company, and I'm also not directing clients to do any kind of trade. I'm more servicing whatever question they need or trades that need to be coordinated. So I'll be looking at things, but I won't be the one actually trading on behalf of the client, right? I'm just sitting in the middle between our trading team and the client. Now, one of the reasons why I love my job is that, of course, I'm always talking to those clients to understand what their perspective is, what their strategy is. Of course, they're coming to me to understand our view of the market, what we're seeing in the market, the large trades, that would get done, or the strategies that we're hearing of, and so on. And so in that sense, really useful to talk to them, to kind of help them optimize their strategies, also provide the right kind of pricing for whatever structure they're wanting to put on. But that's really my day to day. It's really helping them structure things, making sure that the trading team is responsive, making sure that they understand the process, sometimes negotiating credit agreements or deals, depending on whether they're trading or just depositing assets with us to generate a yield. So that's about it. Yeah.
Amazing. So do you find that your clients kind of get emotional with you?
Not really, actually. That's a very good question. But typically, the clients that I will deal with, which are institutional by nature, so they tend to be a lot more sophisticated and a lot more professional than I even would be, right? So when you're talking to large clients, they've been trading and are a lot more active than you might be. So they don't really get emotional. Typically, they have a very good reason why they're putting on a trade. Typically, what I notice is that they do it in a more sophisticated way than the typical retail user. And also, typically, they have a much longer time horizon than the typical retail user. I'm talking here about OTC trades, right? So trades that are done for larger amounts and get quotes with us, because also we have clients that can trade on the platform or get our prices, and there would be more high frequency trading strategies, but that I don't have necessarily visibility on, or I don't need to be involved in the process. But so the way they work is typically with derivatives, right? Where they would be either hedging their exposure, or they would be minimizing the cost of their trade by selling some contract in order to buy another contract. Or when they want to buy or sell an asset outright, meaning in the spot market, they would use execution algos, which is something that we offer either on an OTC basis or on the platform, which is essentially um, instead of doing a binary trade where you sell at one moment in the market, you can actually average your execution over time. So you could be like, hey, Justin, I'm looking to sell Ethereum over the next 20 days. And so what Amber will do is slice whatever amount they give us into very, very small chunk and sell by small increments. And so what you end up having is after the end of the period, let's say 20 day for the example, you get kind of an average price, whether Ethereum got up or down, you kind of end up at the average of all those prices during that period. So that's a more elegant way to get in and out of an asset.
Oh, that's awesome. So it's kind of like, you know how in all like investment things there's dollar cost averaging, right? But
Yeah.
this is kind of flipped.
Yeah, and it's interesting because personally, I love dollar cost averaging over price levels, but you can definitely dollar cost average over time, right? So there are two ways of doing it. Either, like for example, I'll give you my personal experience about this bear market and how I accumulated a bit more Bitcoin, and I did it too early, so probably I'm a bad example to follow. But so I did have some US dollars, some fresh capital, to allocate to crypto. When things got down to 31K, I bought a little bit. When things got dropped down to 29K, I bought a bit. 27, 25, 23, 21, 19. So I was buying every time we were going lower and lower. Now, obviously, in retrospect, that was maybe a bit too aggressive and I could have waited a bit longer. But anyway, the average price is around the mid 20Ks. Hopefully, over the long run, that will make sense. The one that I was describing, and you're absolutely right, is a form of averaging into an asset, but it's done over time, irrespective of what the price is. So sometimes, actually, over the duration of an execution algo, a TWAP, the price wouldn't move much, and so it won't have made much of a difference. But other time, it does go up and down quite a lot. And so when you're talking, for example, to a family office, they don't want to take a binary bet on the asset. They're not looking to just buy Bitcoin and then hope that it goes higher in the next 2 weeks. They just want to gradually go into the space. And so those algos are just a nice automated way to do that, right?
Amazing. So can I ask your personal opinion on, MicroStrategy and what they did wrong there?
Sure. I mean, honestly, the thing is, I don't know that they did anything wrong. I believe that Michael Saylor was very aware of what he was doing and the volatility of the asset. So I think there's been a lot of noise, within the industry, especially because now he moved from being a CEO to being executive chairman, that he was kind of ousted out of the company, that this was a total debacle. I'm not sure that actually the MicroStrategy board or the investors see it in that way, right? It's just a momentary move into a longer term investment, right? Of course, that's affected the share price quite a lot. Of course, right now, it's not looking like a good trade. But look, those changes of narratives, you'll have them in all cycles, right? And so when Bitcoin is at 50K or 60K, all the people that were making fun of Bitcoin are a bit more silent, or they're changing their mind, or, oh no, I would never said anything wrong about Bitcoin, I'm just not sure how to, something like that. And then when it goes down, of course, they all come out of the woodwork and are like, oh yeah, I've told you it's worthless, it's going to die, and so on. And I've heard it for 7 years and it doesn't affect me much. I'm sure that Michael Saylor, in a weird way, is not affected too much on an emotional basis by that narrative. But of course, we're talking about large amounts. Could he have handled it a bit better? I think he probably knew that as inflation was kicking up and the Feds were about to raise rates in the US, or central banks were about to raise rates around the world, that markets were going to turn bearish, and so that would affect crypto prices. But I think he wanted to stay true to his promise of not selling Bitcoin. Um, so yeah, I don't know. I think it remains to be seen, basically.
What are your kind of price predictions for the majors, let's say?
Yeah, that's a great question that I get asked pretty much daily, several times per day. I'm very, I'm very apprehensive about giving price prediction. I will answer your question, but before I say that, on top of saying it's not financial advice, I would say whenever someone reaches out to me asking if they should buy Bitcoin now, I always tell them the same thing, which is, if you have no allocation to Bitcoin, put a few percent of your investment budget into Bitcoin, close your eyes for 3 years, and we look at it in 2025, right? So that's my base advice, right? But if we're talking about market moves, I think that now most people have turned bullish for some reason, um, because of more the macro stuff that's happening behind the scene, right? With well, basically the assumption that inflation has peaked, and so that the Fed will be able to stop raising rates or even lower rates to go back to the easy monetary policy, that the Russia-Ukraine will eventually get resolved, that the COVID situation in mainland China will get resolved, that the supply chains will cope, and so on. So there's a bit more of optimism after a lot of bearishness. I tend to be always a bit contrarian, which is to say, I don't think that we're done just yet, basically. And I'm talking about crypto, but I'm actually also talking about, tech stocks, growth stocks, and so on, which is, we have gone down quite a lot. Chances are we have touched the bottom. Now, whether that means that we're due for a move up, an uninterrupted bull run, I don't think so. And typically when I talk to my clients, and we just chat about markets, like, in a very casual way, they also think that we're not done just yet, basically. So either we'll have another painful moment where we need to retest the recent bottom that we have across all assets, or even that we'll go a tad lower, and then maybe we can have another leg up, but that's like further out, like in 2023, not necessarily for this year. So you notice I'm not giving you an actual price point, that I'm targeting, but I think it's still a useful, feedback, which is, I do think we've probably hit the bottom, or we're around that zone for Bitcoin. Like anything below 20K, I think if you're a long-term investor, that's definitely a good price to start accumulating in or averaging in. And same thing for Ethereum, anything around or below 1K is definitely an interesting price to be buying at. And then you might have to suffer a bit of volatility, a few more retracement, a few periods of uncertainty. But I suspect that in the coming years, these will look like really good prices. And maybe I'll finish off by, using on that point, right? There's that meme, I don't know if you've seen it, where you have like two selling points, one like Bitcoin at 60K and one Bitcoin at 20K, and everybody's going at the Bitcoin 60K and nobody's at the Bitcoin 20K, right? And it's kind of funny and ironic, because we all get it that when Bitcoin is at 50K or 60K, everybody wants to buy Bitcoin, and when it's at 20K, nobody wants it anymore. But actually, that's what's happening literally right now, where everybody wanted to buy Bitcoin at 50K or 40K, like the upper 40Ks. When it got down to 30K or 20K, people were like, oh, it's looking too grim, I'll wait for things to get better, and so on. And then probably in retrospect, these were the times to be accumulating, right?
Absolutely. Right. So, can you tell us about a time where you faced extreme risk, or what your biggest challenge was and how you managed to kind of get out of that?
Sure. Ironically, they weren't really like trading situations, as in markets moved against my expectations, because I think when you've got a long enough time horizon, those things don't really happen to you, or if you have enough conviction, you just keep on hodling. and that's paid off so far. But rather, a moment of big threats were with platforms, basically. And so, of course, in the crypto space, you've got people that would advocate that everything should be in cold wallets. I definitely have a significant chunk of my holdings into a cold wallet, but for obvious reasons, it's also very convenient to have assets on platforms, right? Because you need to trade them, you need different order types, take advantage of different features on a platform, and it's just a nice way to have access to it a bit in a bit more convenient way. But so the thing that happened in 2017, 18 was one of the exchanges that I was on went bankrupt. Now, fortunately, I was able to get out of the door fast enough. That was an exchange called Gatecoin, which was kind of the Hong Kong exchange. So you could on-ramp Hong Kong dollar onto the exchange. So it was kind of the only way to get exposure to the asset. But then there were rumors that they got illiquid. And of course, I took that out of private wallet. That was a really, I want to say almost lucky moment, but just a great way to manage that situation. But then I think you've had the same thing in this cycle, right? Which is probably a painful thing to talk about for most people. But there was the Luna UST collapse, where a lot of people had UST on that Anchor protocol, which I did as well, right? So I had put some UST on the Anchor protocol. When things started to get depegged, of course, I took my money out. Actually sold, but took a 30% haircut, which is definitely very painful. Now, fortunately, that was well traded. So of course, you need to trade and remake that money, and you don't need to make 30% to go back. You need to actually make 40 or 50% just to break even. But if you bought some of the cryptocurrencies during that time, they were actually relatively cheap, and now they've gone up a bit, so you can kind of make some of your money back. But there was also the same thing with Celsius. So I had a few altcoins with Celsius, and again, there were rumors of them being illiquid. And also, thanks to my experience with Gatecoin back in 2017, 18, took my money right away. So yeah, I would say maybe as an advice for people is, when you do face moments of volatility and things are looking bearish, if you do hear rumors about platforms that are not sustainable, not liquid enough, better to be the first one out of the door and then reassess. Maybe it's nothing and you put your money back 2 weeks later because it was just a false alarm, but you just don't want to be caught into all the legal proceedings. So for example, I have friends that did have money on Gatecoin back in 2018 that are still following through on legal proceedings to get back their coins, which are still there, but they need to be liquidated by the court and so on. That's it. Yeah.
Amazing. So, like, you always need to make snap decisions, like really quick decisions, right? Do you use any bots to check at all?
Absolutely not. None at all. I wouldn't, to be honest, I wouldn't trust any of those bots on a personal basis, right? Like those that would be available to retail. I also don't even really trust indicators on charts much. I love posting about them. I love looking at them. I think they can kind of add a piece to an overall puzzle. But I think people who trade based on bots or indicators are just asking for troubles, basically. Especially, I would say, retail guys that are just getting started. In all the bull runs, you always have some guy on YouTube or Twitter that is telling you, oh, if you just listen to my course, you'll make X% every week or every month. Or if you learn about that MACD or RSI or stochastic or Ichimoku cloud or Bollinger Band strategy, you can quit your job and make money trading crypto. I believe like 100% of that is just asking for trouble and that they will lose money. So I don't use anything automated. It's just about holding quality assets and then diversifying to optimize the core asset.
Amazing. Thank you for this alpha. And so, how can traders keep a level head in times of extreme volatility, like, for example, now?
I think first it's about understanding your risk profile, which is a lot of people overestimate their ability to withstand volatility, right? So if you ask someone when they're buying Bitcoin at 50K, if they're okay, if things drop 50 or 60%, they will all tell you yes. But when things do actually drop 50 or 60%, not so much, right? And you can see people selling. You can actually see that on-chain data, right? So if you follow platforms like Glassnode or CryptoQuant and so on, you can actually see the age of the coins that are being moved on chain. And so that typically the short-term retail traders are the ones losing money, that the longer term ones are actually making money. So I would say first, be sure that you're investing money that you feel comfortable with and that your risk profile within your crypto portfolio is mostly towards safer coins and less towards the risky coins. The second one actually that I would mention is the one we talked about, which is the TWAP, so that time weighted average price algo, which allows you to enter or exit an asset over time. You even have like relatively long-term algos, which will take 30 days, for example, to execute. That's a nice way to kind of enter into an asset and kind of forget about the whole price consideration on the short run, or if you're selling, same thing actually. Yeah. The last thing I would add with regards to keeping a clear head during moments of volatility is I think it helps for the stuff that you're keeping on platforms, like on centralized platforms and exchanges, to earn a yield on those assets, right? So it's something that not everybody thinks about, but on most platforms, definitely on mine, and I suspect on Globe Exchange as well, you can actually earn a yield on the assets that you hold there. And so, of course, when things go down, it still won't feel good, meaning the USD value of your holdings is going to go down. But if you're earning 5, 10, 15% on whatever yield generation platform or mechanism you're using, it's going to soften the blow. And it's also going to set you up for the next bull run, the next leg up, if and when it does come, right? So I think earning a yield on assets that you're not moving and that you're keeping on centralized platform is worth checking out.
Thank you. So what are your next steps at Amber Group?
Yeah, great question. I guess you'll have to ask my boss, but personally, of course, look, the thing is, my first job was in sales, and I've just never stopped ever since. So I've only ever worked in sales. I just want to keep on doing that, but of course, grow within that role, meaning reaching out to bigger clients, managing bigger deals or more complex deals, of course, managing a bigger team. And then maybe the second part that I'm kind of getting into now is increasing my visibility on social media platforms. So I don't know if you saw, but on LinkedIn, I'm quite active with posting charts and info and graphs and so on. And then I've started to gain a following. So I'm hoping that helps. I think it does help, but I think it can keep on growing. The only thing is I know everybody in my generation wants to be an influencer. So I'm that with a grain of salt, basically.
Just a little bit of a saturated market there.
A little bit. Yeah, definitely.
Yeah,
That's
yeah.
why I haven't been able to pierce in on Twitter. LinkedIn, a bit more easy, like a bit better for the professionals. But yeah, it's tough to get in.
Yeah. And also it's what, so you didn't get into Twitter because there's so many like bad actors out there, right? And then it's just so much competition.
It's absolutely not because of the bad actors. To be honest, I'm very much in for free speech and kind of non-monitored platforms. So I think, if there are bad people on Twitter, you've got to be aware of that and kind of filter through that yourself. So I wouldn't avoid a platform because of that. I just think that for me, it's always been a platform that I struggle to connect with because I think you need a large follower for your tweets to be noticed and read and interacted with. And so it was a bit discouraging at the beginning. Whereas for my LinkedIn presence, it came really naturally, as in I was just posting interesting charts because I think they would help my clients or kind of share news about stuff that was happening at my firm. And then more and more people followed me, which I didn't even know was possible at the beginning. I thought you had to connect with people to follow them. Then I started having people that followed me without even connecting necessarily with me. And so that kind of motivated me. And so now, yeah, like daily, I will post at least 1 or 2 chart, graph, insights, news item, and so on.
Amazing. If you'd like to start trading crypto with Justin's amazing advice, then don't forget to check out Globe Exchange, where we offer a range of different products from spot to perpetuals. So happy Globe trading! Thank you so much for watching this episode, and if you enjoyed this content, don't forget to like, comment, and subscribe. Thank you so much, Justin, and I'll see you next time.